All right, everybody. Welcome to episode 4 of the Beef and Bitcoin podcast with your hosts, Brett and CH. Can't believe it's episode 4. I just got done editing episode 3 last night, so that is now available on YouTube. So go check out YouTube and search for Beef and Bitcoin podcast, and it will most likely be the only thing that shows up. Before we get started, quick shout out to some of our favorite podcasts that you 100% should be listening to over ours, and make sure you go and subscribe to those. So the first one, Marty Bent, Tales from the Crypt, Stefan Livera podcast, Noted podcast with Pierre Rochard and Michael Goldstein, Bottom Shelf BTC, and last but not least, Peter McCormack with What Bitcoin Did. And, speaking of Peter McCormack, he had an epic tweet storm this week. Brett, why don't you take us into that? What was he talking about?
Yeah, so I saw this because someone tweeted, like, this has been, look how many likes this has. I'm just going to highlight it here. 2,300 retweets and 7,600 likes. This is the most engaged crypto Twitter post. If you're not on crypto Twitter, get on crypto Twitter. It's a fucking great time. It's a lot better than crypto YouTube, a lot better than crypto Instagram. Anyways, there has not been this much engagement on a fucking crypto tweet in months. So anyways, here's his thread about how I turned 32,000 into 1.2 million and back to pretty much zero. I think there's a lot of people that can relate to somewhat to this. Maybe not to zero, but it's basically, long story short, if you were in crypto before, like if you even got in like in summer 2017 and you fucking threw $1,000 into a bag, it became $20,000 if you didn't touch it, and then it was just $20,000 all of a sudden one day in December. And that was the reality for a lot of people. Like even my own portfolio in that month of December, I didn't even start tracking it because I didn't want to track my portfolio beforehand because I knew it would be unhealthy. Because I'd already checked prices way too much, and I was just like, I'm not going to track this. So I started tracking like mid-December, like 16th or something, because I was like driving home from school, and even in the drive home, my portfolio went up like 100%. And I was like, fuck. And I got back, and I was like, my brother's friends were over. I'm like, this is what's happening right now. And it just, the whole month of December, I kept looking at it. Like, my brother and I at one point were driving to Florida. And one of the best part, this is the funniest thing ever. And if anyone remembers, there was a time, I'm getting a little off track here, but there was a time when John fucking McAfee was doing coin of the day or coin of the week. Do you remember those days? Do you remember that? Fucking.
It was just a total pump and I remember getting
pump and
DMs
dump
from people,
oh
asking
my
me,
fucking
what
god,
coin is McAfee gonna pump? Oh, crazy.
That was the funniest times ever. Like, and people were begging him, dude, stop it, because people were just, there'd be projects where their coin all of a sudden would double out of nowhere, because that's how sensitive price was to news. And I was driving, my brother and I were driving my grandpa's car to Florida for him. We were doing vacation together, and he's like, oh, I'll just give you guys some money and drive to Florida and start shipping. We're like, okay, whatever. Um, and I looked at my portfolio, and it was up like 50%. I'm like, what the fuck's going on? And then like I'm looking at my side bag, and it's like had jumped from like I think like a penny and a half to fucking like 3.5 cents. And I like look on Twitter, and John McAfee coin, because he switched from coin of the day to coin of the week because people were begging him to stop. And it was Sia coin was picked that day, and it was just like, people are just probably piling in. And I think it was crypto Twitter was so active at that point that everyone's like, oh, this must be the future. I mean, people were that naive. And but anyways, going on what Peter McCormack was saying, up until December, talking about how he had not much money, his agency folded, so he started diversifying, every crap coin, shit coin, whatever you want to say. And I think I was guilty of that. Like, I didn't have a shit ton of bags. Like we'll talk about Rand Nooner stating a crypto portfolio should be diversified with 70 coins. No, sir. The less bags you have, the easier it is to manage. Don't do that. But he talked about, by March. So if you look at crypto charts, we went from 17 billion to 833 billion in a span of a year, from January 1st, 2017 to like January 3rd, 2018. But in that time, we went from 17 billion to about 120 or so billion in that first probably 5-6 months. So if you were in basically, if you got in before like April of 2017, you were really fucking set. Like, you didn't really have to do anything the rest of the year. The market cap now is at 100 billion, which is kind of sad. That is what it is. But that's good. That means just everything's fucking draining. I'm gonna fucking pull this back a little bit. So we'll start with this is a good idea. So you go from even better, like December 2016, 14 billion, but you see 17 billion, and so you go 17 billion. At the start of the year, we hit what 120. And that was a big deal. Like I didn't really get into crypto till I had been following it, but I didn't really get into it until early May. And this was going on. So you could imagine, dude, I was in like FOMO period. I'm thinking everything. I was talking to my buddy. I was like, holy shit, this is happening. Um, and then we had that little dump. But even though we had that little dump, I was still buying everything, you know. And then we did that again in September. And if you remember correctly, last year we had in September we hit 5,000 on Bitcoin, and that was a fucking huge deal. There was that Bitcoin Cash hard fork. I should have loaded up in Bitcoin because the Bitcoin Cash hard fork was the play of the century. If you had both of those, because Bitcoin Cash went from like $200 to 4,000, so um, it was free money basically. It was a free dividend. That was the easiest way to put it. But anyways, in September last year, we had China FUD for the millionth time, and then Jamie Dimon saying Bitcoin's fucking dumb. And like I remember, I fucking bought that dip and felt like a fucking champion. Like I stayed up all night. It was a Thursday night into Friday morning. Pulled an all-nighter, bought like a bunch of shit at like 6:30 in the morning, 6 o'clock in the morning probably. Was at the gym because I just couldn't sleep at that point, and I looked at like the portfolio, I looked at fucking whatever, coin market cap, and everything had pumped. So, because that was we were just up, we were in a retarded uptrend then. But as you can see, everything went astronomical. I didn't even expect this. Like in October, I was saying, okay, maybe we might get to 400 billion by the end of the year, but like Thanksgiving just fucking pumped everything. Like, and I think crypto humor, I think we both experienced this. Like, I had people coming up to me, oh, I'll give you $1,000, I'll give you money, I'll give you, people were asking to, and I was like, I told everyone no at that point. I was like, this is fucking ridiculous. And that should have been more of a cue and indicator for me that like this thing was way out of hand, out of line at that point because everyone wanted to get into crypto. I mean, I had kids from high school who were just texting me out of the blue. People I know like, oh, he's into crypto. Let's text him about it. And I was like, I told people like, yeah, you're getting into this. Like, don't even fucking put money in that you can forget about because you will likely lose all of it. And I've gotten texts from people like who are like either pissed off or, you told me to get in this. I'm like, well, dude, I told you don't risk, more than you can afford to lose because you're on a parabolic train that's gonna end. But as you can see, we peaked at peak euphoria in January, and so now we're here at 100 billion, capitulating. I think we're close though.
Yeah, the capitulation is definitely strong in the market right now, and based upon, I like to base a lot of my thinking upon what people say to me when they send me a DM. So if I can get a little market sentiment of people are scared, asking me where the bottom is, how much lower can we go, that's giving me a good sense that people are starting to get more afraid, which is fantastic because hopefully that just means the bottom is sooner rather than later.
Yeah, no, and to go back to what Peter McCormack said, he like, and I think a lot of us were in the same boat. It's hard to explain like the psychological effect unless you've been through it before of making stupid money that quickly and literally doing nothing. Like not doing nothing, but you're like, holy shit. And so you think, as he said, he diversified into a bunch of things and basically all of them failed. He admitted like, yeah, I'm not a great trader, lost money on that, mining, etc. But the thing is like it's a learning experience. Like I learned so much in that basically in the last probably 18 months just from being in crypto, more than 18 months now actually, shit. But really that you go full circle and you're like, wow, we've went through a full cycle in 24 months, for crypto. I mean, which is insane because stock market now is turning over, global market's turning over, and that's getting pretty scary to be honest. Like when you look here, I'm a little diversion here, but um, yeah, this doesn't look good. This is the S&P 500, and there's literally nothing pretty about this chart. Like if I go to the daily, when you look at the daily here, um, basically last week was a giant dead cat bounce for the market, and it's kind of scary. You ask why? Because we just broke below this pattern again. I think this next Monday, I don't think this will be uploaded by then. Might be. Monday will be the 17th. I think things are gonna get really shitty. Because like you can look at probably all of them. They all probably look like shit. Like this here, you could probably just draw a line here, but nothing looks good right now. Like all of them broke below where they should have. And yeah, so technicals aren't good, fundamentals aren't good. I mean, you can just look at headlines right now. There are a lot of companies they're prepping because they know it's coming. They're cutting jobs, like you saw GM, you've seen Ford, Starbucks, you name it. They're cutting jobs left and right. Um, you know, it's not good. I mean, they're trying to prep for the inevitable, but here's the reality: a decade of manipulation by central banks through quantitative easing into quantitative tightening, and they prolonged it. There's a great guy on Twitter named Paranoid Bull, and he talks about how in 2016 the cycle turned over, and then the ECB, which is European Central Bank, pumped market with a shit ton of liquidity. Um, and I think I have the photo here somewhere. I literally opened my whole Twitter feed so we could find these great photos. And if you want to talk about anything crypto humor, feel free to go talk while I'm looking for this photo here.
Yeah, I wanted to go back and touch upon just how much we've learned in the past,
Oh, 100%.
16, 18 months just from being into Bitcoin and
Yeah.
crypto, and you end up just learning so much. And if there was one piece of advice that I wish someone would have given to me was to actually not trade and just to get into a position into
Yeah.
Bitcoin. Obviously, as the earlier the better, but when you're brought into the crypto ecosystem, if such a thing even exists,
Yeah.
you can find yourself going down the shitcoin path pretty quickly and pretty easily because it's basically gambling. I mean, these tokens are essentially worthless. I wish somebody would have given me that advice from the start. Learn as much as you can. I wish the Bitcoin standard would have been out before I got into crypto. You can have an awesome book to read to get yourself started and understanding what's actually going on here from looking back at monetary history and monetary economics, and then you can bring yourself to this investment thesis. Like, okay, interesting. Like, does Bitcoin have a chance at becoming global money? And then you can say, all right, I'm going to take a position. I'm going to get some exposure into Bitcoin, and then just throw that shit onto cold storage and do not touch it again. I just nobody was here to hold my hand to give me that piece of advice. So you live and learn, and crypto will certainly teach you valuable economics lessons because there's a good chance you will feel like you are getting wrecked at some point in your journey.
Yeah. Yeah, so I pulled up this chart here, and it's QE Punch Bowl disappears in 2019. And so this shows just like the money. And so over here on the left and the y-axis is billions. So that's really trillions. That's 3.2 trillion up there, but that's 3,200 billion. And this shows you the money they added to the market. In '08, obviously the financial crisis, the Fed added a shit ton here. You can see one of the larger ones. But you also have the ECB, European Central Bank, SNB, Swiss National Bank, BOE's Bank of England, BOJ is the Bank of Japan. And you can see they're adding all this money here in 2008, 2009. Why? Because what happened with, even if you look at the stock charts actually don't look as bad in 2008, 2009 as they did in 2000, the market recession there. But in 2008, what a lot of people understand was it was a credit crisis. No one was lending money, and we were basically on the verge of a Great Depression, is what they talk about. If there's a great movie you should watch, it's called I mentioned to you the other week, crypto. What was it? It's about the
Shit, I can't remember. Um, Too Big to Fail?
Too Big to Fail. Yes, if you get a chance, go watch that movie. It's a phenomenal movie. It's not even that long. It might be an hour and a half. Go watch Too Big to Fail. It explains what happened, and it just talks about the bank executives and how, and they have a bunch of people play the bank executives, the treasury, net or whatever, treasury or whatever. But it shows you what happened basically. A lot of people don't understand what happened in 2008, 2009. Basically, they were trying to avoid giving a $1 trillion, whatever buyout or whatever it was. Basically, they did 700 billion because it sounds better than $1 trillion. Uh, 'cause 700 billion is a lot of money. But as you can see, they're always adding here to their, been adding, and I think that's per quarter or whatever, per, month. But anyways, as you can see down here, we dipped in April 15, and That's when the cycle started to turn over in 2015, 2016, and then we had one last giant stimulus. Now the Fed only did three quantitative easing periods. The largest one being the first one, QE1, and there's QE2, and then you have QE3. But as you can see, the ECB has basically been doing it the whole fucking time because the European Union's a giant fucking joke and is currently dissolving right in front of our eyes. You can see it with France. France is about to probably kick Macron out. You see it with, you know, Brexit. You see it with Italy. Italy doesn't want to do anything with the ECB, and you see a bunch of other countries that are just not accepting their migrant reforms, and are tired of paying their bullshit to Brussels, when Brussels is the headquarters of the EU in Belgium. And so here you see and even China has been stimulating everything. So basically, a decade of manipulation. Now there's going to be consequences. Is what's happening. That's why we've seen asset prices. Explains completely why asset prices in 2019 or 2018, excuse me, have literally. I'm going to open up a record number of assets. I'm just going to open this up for you guys here, so you can see 90% basically of assets are down against the U.S. dollar in 2018. Cash has been king. I think we might have spoken this last time, but here's what it looks like: percentage of assets, negative return in USD versus local currency. But what matters is U.S. dollar because that's probably the best store. I wouldn't say store of value, but comparatively, it's a lot better than everything else, especially with interest rates rising. And you can see more than 1920. In 1920, there was a lot of people don't even know there was a huge recession in 1920, 21, and the president at the time, I want to say it was Harding, didn't do shit. That meant the recovery, it was more brutal, but the market actually recovered. And then you had the Roaring 20s, 1929, you had that crisis. That's probably 39, 40, started World War II. Post-war, probably Korea right there. And then you had, stagflation in the 70s, early 80s, you had a recession. And then that was the beginning of the millennium boom. And then even in 2000, not as bad. 2008 even wasn't that bad comparatively. But then you look at 89%. That's a big deal. As you can see, the cycle is turning over, and that's why, we may be wrong as fuck on Bitcoin, but I would like to think we're early. That's all. And it's hard to say what will be the next reserve currency, but it'll be interesting. Probably a fight between gold and Bitcoin, and that really comes down to nation states. And I think if you want to talk more on this, you can.
Yeah, it's such an interesting topic, and it's one that I'm becoming more and more interested in because eventually, I mean, you're seeing it globally, and you certainly know more about this than I do. Russia buying more gold, China buying more gold, and people, other countries are getting ready for that potential move away from the U.S. dollar as the reserve currency. You're seeing oil traded in other currencies besides the USD, and I think that within the next decade, I'm hoping that you're going to see more of these commodities actually start getting priced in Bitcoin. And I don't know if that only happens after Bitcoin matures more. If there's a new bottom that can be settled at I have no idea what amount it would be. That things start getting priced in Bitcoin, that's when it starts to get a little bit more interesting. But I think that, and I'm basing this a lot on listening and reading a lot of what Mustap Murad posts on Twitter, and talks about that. Central banks and governments are going to be the last people to buy Bitcoin because that essentially that's capitulation at its finest. You are admitting by spending your domestic currency that it is not nearly as strong as Bitcoin because Bitcoin is the most sound, hardest money that in human achievement, right? Fixed supply, it can't be easily inflated, and it's extremely difficult to change. That monetary hardness can only be found in Bitcoin. So once central banks and other governments start capitulating and purchasing it to keep in the reserves, that's when the nail is kind of in the coffin. It's over. But with that being said, the largest, most dominant governments will most likely be the last, right? So I don't see the U.S. government or the U.S. central bank buying Bitcoins to keep in the reserves anytime soon, just because the dollar's strong right now. They have no reason to believe that Bitcoin would overtake it as some sort of reserve currency. But smaller nations for sure. I mean, Bermuda, Malta, they are very pro blockchain, even though that's just a meme. The blockchains don't really exist.
Yeah.
But I have a feeling you're going to see those countries jump in first. And you also might see people start moving to those locations for whether it be tax benefits or other things where they can more freely use their newly found Bitcoin wealth.
Yeah, no, and when he says central bank of the U.S., he's referring to the Federal Reserve. But here's the thing. We are on the verge of something big here. It doesn't matter. A decade of manipulation. I pulled up here. I'm sure you can see it, CH. This is the quarterly bar chart of the S&P 500. So 3-month bars. Yeah, we're about to have, and if you trade or understand price action, a quarterly engulfing bar is such a powerful fucking signal. Like, the higher the time frame, the more relevant the signal is. A quarterly engulfing bar is so fucking big. That's like a scary thought. Why? Because even if you just look at halfway down for the S&P 500 is 1,500 points. That means pensions, endowments, anything you can think of are fucked. And that's so much money. That's trillions of dollars just evaporating, just disappearing. And what people forget is like, mutual funds and all these things move slowly. And then we got to remember we have algorithms now that basically run the whole fucking market. Um, you know, and there's a great tweet thread about it the other day. This guy basically talked about a hypothetical situation, which was it was Paranoid Bull again, about how the whole market's basically you know, run by robots, is what he says. He talks about this, dystopian future where a president's elected because they continue the cycle in 2016. A highly leveraged real estate mogul, he's referring to Donald Trump, was elected because the cycle continued. Had the cycle turned over in 2016 and we had a recession then, I think the election would have been much different. People have been more open to whether third-party candidates or been like, well, fuck these two candidates because nothing's changing. But when I talk about price action, here's a good example. Quarterly bar chart. You got doji here, another doji right there, and that's a very good signal. So you're like, okay, well, if you want to sell there, and then obviously that was supposed to be the turnover in the cycle right in here, and I think that was Brexit basically. Brexit was Brexit was in the summer, I think. But anyways, as you can see, the cycle is supposed to turn over there. Didn't happen, but so we pushed the cycle longer. And for those who follow the equity markets, 2017 was a breeze. I mean, it was like every day you were up, and I think we had very few days that were more than a 1% drop. Very few. But it's something to keep in thought. If you have a lot of stocks, this isn't financial advice, but you know something I think CH and I can relate a lot to in crypto with our experience is cash is a position, and it's like probably one of the best positions right now. It has been for 2018. It gives you a lot of leverage to move around, whether you want to go buy more Bitcoin, whether you want to go buy a stock when it's down, whether you want to go buy gold or silver, anything. It gives you leverage to move around because cash is still universally accepted everywhere. It's a legal tender. If I walk into a store and I hand the merchant a $5 bill, they can't not accept it if I'm buying a water bottle. But if I fucking hand him a piece of gold, he might say, I want dollar or something. But that'd be pretty stupid because he might want gold. But so it's something to keep in thought, like where we are in the global cycle, and that's what I think a lot of people, there's people are still hopeful about crypto being another alt season, and there very well could be. I could be wrong, and we could pump a shit ton. I very well could be wrong, and that's always a possibility with crypto. Like when you look at the 2014 charts and 2015, there was like an alt season after the Bitcoin top then. Um, but then again, like most of those altcoins don't exist anymore, and I think you've touched on this before, crypto.
Yeah, exactly. I mean, your favorite shit coins of the past are most likely not around today. There's only one or two that have stuck around in the past couple of years, and each year it seems like we're seeing a brand new set of shit coins come about, and that's most likely going to continue. I don't think alt seasons are done. I just think they're going to be a brand new set of pump and dump coins that will start to present themselves when market sentiment around crypto has gotten a little bit better, right? We're in the middle of a deep crypto winter, and hopefully we come out soon. But with that being said, when we come out, I have no doubt that there's going to be a bunch more scams and shitcoins that are,
Yeah.
claiming to be Bitcoin 3.0 or whatever. And we're gonna be dealing with the same exact thing we dealt with the hype of 2017.
Yeah, I mean, I think, there's a lot of people have just completely been washed out of crypto. I mean, as I've noticed recently, crypto Twitter is deader than ever. Um, so here again, are we in a situation where like a majority of people are just not even thinking about crypto anymore? That's pretty likely, I think. I think it's pretty much lost. Um, you know, it's hype around it. The hype's gone for sure. It'll be interesting to see. But I pulled up a chart of Facebook here, and this is just monthly bar. And here again, another engulfing bar. Um, Facebook gapped down from 220 bucks basically to 100 and fucking 70. And so what that means by gap down, I'll show you here. None of these things are bullish. Facebook's a dead man walking stock. I hate Facebook. I hate everything about it because of the fact that it just store people's information. They're trying to spy on everyone. Don't buy a Facebook home. Don't buy Amazon, whatever. Alexa, any of the things. Don't put those in your rooms. Don't put those in your houses. It's already bad enough that all your recording, all your conversation on your phone, everything records everything. But do not put those fucking things in your homes. Please, just do yourself that favor. But here's what I mean by gap down. Facebook was trading at fucking 220, and the next day, the next session, it gapped down to 175. That's like a 25% drop, if not more. Yeah, it dropped. It dropped 20%. That's huge. And that was the end of Facebook. Once I saw that happen, that was it. Like it rallied back up, just whatever, because it was so oversold there. But I mean, you can see Facebook's a dead man walking. I wouldn't be surprised long term, and I know we're going off topic here on Facebook, but it's all part of the same thing. We're all in the same macro here. Um, and that's what I try to tell people. Like crypto, the whole crypto bubble was definitely a part of that macro. When you think about how easy the 2017 market was, and the whole thing was people were searching for yield. And when I mean searching for yield, is they're looking for return. You know, and crypto by far fucking blew everything out of the water. Like there were articles being written at the end of 2017, early 2018. The returns were astronomical. It doesn't matter what coin you picked, whether Monero, Litecoin, Ethereum, Bitcoin, Ripple, you name it. Returns were in the tens of thousands percent, even 100,000%. When they were looking back to either early 2017 or 2016, absolutely insane. But I think Facebook's gonna. I would love to see Facebook go back to 30 bucks, if not zero. But I think very well that this is going to go down quite a ways. I mean, there's very little support in here. You can even just look at the volume profile here, which is this just shows basically where the price that people bought at and the volume wise. That's the highest amount at 27 bucks. So the amount of shares that have been bought is the highest amount at 27 here. And if you look at like Facebook executives dumping shares, they've been Mark Zuckerberg and Sheryl Sandberg. Sheryl Sandberg's the COO of Facebook, have been dumping hand over fist all year, and they're still dumping shares. Zuckerberg's dumped billions of worth. Sandberg's dumped hundreds of millions of worth. What's that tell you? They have zero faith in their company, and you can see it in the chart. And they have no faith in their company. I would love to see Facebook go back to zero, but I hate Facebook, and we've never seen like a social media company really go through a full cycle, and people might just stop using the platform completely because they just don't trust it.
I have a feeling that might be a possibility in the next 5 to 10 years. You're just going to see the platform kind of people. I don't use it personally. I don't find it helpful, useful for anybody. It's just a lot of nonsense on there, and I think that hopefully as Bitcoin grows, people will start to take their privacy a little bit more seriously. And we might need to see a few more like maybe large cyber events where people are just losing all their information, or their private information is going to be held for ransom. Something big's going to happen where people are going to start taking their privacy a lot more seriously. And that's when you're going to see people, the growth of the platforms start to decline, and also the user base start to go away.
Oh yeah, no, I agree. Like you even just look back at like MySpace. I never had MySpace, but like that was an early form of whatever social media, and that platform's dead. And I think Facebook's a larger scale, so it's gonna take more time to unwind. But it's something to keep in food for thought here, and I think as you said, we need more privacy's been completely ruined. I've been, especially since I've been in crypto, more intent about privacy, and I know I'm so like I'm open about I'm in crypto or whatever, but like I like getting a VPN, storing my files like off my computers, like I don't store passwords and shit or anything like that on my computer. I just write down hard copies and store them on USB sticks and shit like that. I don't fucking store my shit in my computer. I try to be very secure and safe. Like before crypto, like I never really thought about like locking my laptop all the time. I lock my laptop the second I leave it. It doesn't matter where I am. I could be like Starbucks doing some work. If I stand up and go to throw some trash away, I lock it. Why do I lock it? What if I fucking like pass out or something? My laptop's open. I don't know. I'm thinking through all the theoreticals. Theoretically, if I pass out somehow, like I don't know. You know what I mean? I'm like that OCD about it now, but yeah. You have to be though. If you the second you don't care about your privacy, it's good. I mean, we've our privacy, especially in the last 20 years, especially since the passage of the Patriot Act and all these other giant corporations just collecting our data, has just been ruined. And it's terrible because you got these people in the older generation don't understand it. Like you're 30, but like the people who are like 40, 50, 60, a lot of them don't understand it. So they just fucking willingly just leave their data out there, and these companies are using your data and making a lot of money off it too. It's not even that. They're just literally using your data and making money off you.
Right. If you're using a platform or something else and it's free, then you are the customer. There's no getting around it. Your data is being monetized and sold and stored. But that's an interesting topic on the privacy, and I do want to touch on this for just a second. Casa, the makers of the the Casa Lightning and Bitcoin node, they have a really good, pretty much it's like a 5-question sovereign individual quiz or something where they kind of go through and assess your personal security and personal privacy. So they ask you, do you use a password manager? Do you use two-factor authentication? And it's interesting that Casa's business strategy is to provide a service that doesn't really exist yet. And that is becoming a sovereign individual, running your own node, controlling your private keys, storing your wealth in the privacy of your own home, where it could be connected to their multi-sig storage solution. There's just going to be a whole new brand of products that are going to be offered for this niche market in particular, and I can only see that growing in the decades to come. Just privacy is going to be people are going to take it much more seriously. So I highly recommend going to the Casa website and doing the self-assessment for security and see where you fit. And they can certainly help you get off the ground, make sure that you're using 2FA on all your bank accounts and everything like that. It's really important to take that stuff seriously, especially if you're going to get into Bitcoin. You really need to understand the concept of not your keys, not your Bitcoin. It's so critical to make sure that you understand that.
Yeah. Definitely that security point. Like I just recently opened like a Proton VPN or Proton email because Proton's very good about privacy. They're a Swiss-based company, so your shit's not going to be like Gmail where it's just getting collected by NSA and stuff like that. Proton's really cool. I have their VPN too, but as he said, 2FA is huge. I use it on pretty much everything now. I use the Duo mobile app. That's a phenomenal app. I like it a lot better. So if something says like 2FA wise that they say you can use Google Authenticator, Duo Mobile works for it. And Duo Mobile's great. It's a phenomenal app, easy, simple. And as he said, make sure you write down your security keys though, or whatever your 2FA key, because if you do lose your app or whatever, you want to be able to. Not that Duo Mobile's great too, because if your app gets deleted or something happens, it still saves everything. But you want to have your keys just in case something happens. It's important to, it's important to write down hard copies of shit, or hard copies and save it on multiple, USB sticks, external drives, etc. I'm a very big, like I have 3, 4, 5, I don't know how many now of hard copies of just my own, important data, and whether it's passwords, emails, etc. Just, and it's tedious. Don't get me wrong. Taking privacy serious is tedious, but if you don't, it's that one time you lapse and then, oh wow, I lost 5 Bitcoin. And while losing 5 Bitcoin right now, it's not terrible. It's 15 grand. That's a lot of money. But if you lost 5 Bitcoin at the top, that's 100 grand. That's a good amount of money. So just some food for thought. And I have another chart open here. This is GE. There's nothing bullish about this chart. GE looks fucking sad. GE has been buying back. I know we're going a little more off topic here, but GE's been buying back shares a shit ton, like at $30, at $20, and you can see this is the monthly bar. Honestly, GE's probably gonna go bankrupt. A lot of people are gonna get fired, but they'll sell off the assets. They have a lot of good assets, like their train engines, their plane engines, etc. But the company is just loaded with debt. They've bought back a bunch of shares, and now they fucked over everyone who has a pension or 401k that's loaded with shares. I mean, literally, think about that. Like when people talk about dividend stocks, GE hasn't seen a new high since 2000. It was America's largest company at one point. I think it was the largest company in the world actually too. There is nothing good about this chart. And likely the only scenario for this is zero. I look at a lot of charts, and like when I look at Deutsche Bank recently pumped up like 10%. I mean, Deutsche Bank here, dude, peaked at $140 in 2007. It's down like 95%. Basically 94%. Trading analysis, trading view is telling us strong sell. If you look at any European bank charts, they all look like this. European banks are about to have a huge issue. And the big issue is now the central banks like ECB, SNB, BOE are all overloaded with, their balance sheets are full of assets because they've been buying them, suppressing interest rates. And so the question is will they come in and rescue these banks? Go ahead.
I have no clue. I have no clue. We did it once before, and I don't think if we'll do it again.
Yeah, my thoughts are the political risk is much different this time, and I think we're seeing it in France right now. I don't think, as I might have mentioned earlier, I don't think Macron will be a president there very shortly. There's a lot of people. Last time I checked, his approval rating was 23%, which means 77% of people do not want him in there. That's atrocious. And it shows you the discontent they have. I was watching some videos. You don't get it on mainstream media. You have to go look it up. There's videos that you see these protesters. They don't want to deal with Brussels. They don't want Brussels controlling the money, and Brussels is where the head of the EU is, in Brussels and Belgium. And you're seeing political risks unfold all over Europe right now. I think people in general are pissed off. A lot are pissed off. And so I think here again, I don't think people will accept the bailout this time. I think because the American taxpayer paid for it, and basically what happened, the whole thing, if you watch Too Big to Fail, was the only way the banks accepted the initial offer was they could do whatever they wanted with the money, which basically ended up them giving a bunch of executives compensation, which is still ridiculous, a shit ton of compensation. I have no clue what the future is going to be, but I think we're on that cusp of where people might just revolt against their government. I mean, we've seen it before in past history. You look around with the American Revolution, the French Revolution, there's a lot of, we have no clue what's going to happen. And what happens when you have monetary crisis, when you have economic crisis, things change really rapidly. What happened in, the interwar period with Germany is a great example. You have World War I happen. Germany gets pinned completely. It's their fault, which is complete bullshit. And that's what led you to have in World War II. So you have Germany get blamed. Germany goes through a hard, hyperinflation in, I think, 21, 22, and 23. Hitler has his initial rise then, goes to jail, for whatever, speaking out against the government. That's when he starts writing Mein Kampf. You have that happen, and then you have the Roaring Twenties. So Hitler looks like a fool because the Roaring Twenties were a phenomenal time. Everyone, prospered, especially America. But then you have the 1929 crash, October 29, and shit hits the fan globally. It's a complete credit crisis. Banks aren't lending money. Nobody can get credit, so business completely stops. High unemployment. People are pissed, and Hitler starts to make his rise again with the National Socialist Party, and that's where Hitler's rise comes from. And Hitler became Time Magazine's Person of the fucking Year in 1938. Think about that. He was Time Magazine's Person of the Year in 1938. I mean, it just must have looked. I mean, and you think about in hindsight how bad that looked even a year later, and he had already been, persecuting Jews at that point. So it's interesting, economic crisis generally lead to dictatorships. It just happens because people, will look for anyone to, help them out at that point.
Definitely. And, I definitely want to tie that back into Bitcoin for just a second because
let's do it.
The common theme with a lot of that is control of the money, right? It's hard to find a time in history where, but you know more about this than I do, where there isn't a correlation of the money supply being fucked with, and war,
Yeah.
or other political unrest.
It's a great example.
And
Yeah, so you're saying like money supply fucked with and war. So I'm working on a book, and a great example, in the scale of war, when you look at what happened. So in 1870-71, it's called 70-71 War, France, Russia, or France, excuse me, France, Prussia, which was Germany. It was 6 months long. There's roughly 1 million casualties, about 250,000 civilians, and then, each side split the casualties. The war was over pretty quick, and that was that. And then Europe had a great time of economic prosperity in the world in general. All these countries were colonizing, whether it was Africa, South America, Pacific, and in the Asia countries. And then you had World War One come along. World War One came along because they talk about Anglo whatever power. Germany surpassed Britain's GDP. The United Kingdom GDP in 1910. That was a big deal. Britain saw it coming, and they kind of saw the writing on the wall. And that was, that's part of the reason for World War One. There's a lot more than just the Archduke of France getting executed. The build up to World War One was a multi-decade thing. This didn't happen overnight. It started in the 1890s, but eventually with all these countries tied up, you had it happen. But the biggest difference with World War One was countries just printing off money to finance their war. I'm gonna pull. I have the Bitcoin standard next to me, so I'll find it. But I'll look at where money supply got really screwed with. And so, long story short, the whole war is being financed, and America would only accept gold. So America was giving people money, or supplies, whatever, but they would only accept gold. So if you were buying equipment, munitions, firearms, vehicles, you name it, oil, we were only accepting gold. Why? Because gold was hard money. We knew that they were printing off money to finance their side, to pay their people, whatever. And this caused, there's a lot of inflation in most of these countries. Inflation's in terms of, a 50% more, which is a lot, in a 4-year period, which is huge. And that's the reason that war was able to go on from July of 1914 to November of 1918. They were able to finance that war. I mean, and nothing compared to that too. Like 18 million is the estimated amount dead. Nothing compares to that. I mean, literally, the devastation of that war. I mean, technically, the Civil War was the start of total destruction. When battles happened in an area, whether it's firearms, because guns, if you've shot a firearm, that bullets do a lot of damage. Actually, they fuck shit up. But like you introduce cannons and and stuff like that. But then in World War One, it was just gas. The artillery cannons they used were just so fucked. I mean, dude, people were getting buried. I mean, so I'm getting a lot off topic, but the point is the scale of war happened because of the money supply, because government was able to control the money and finance the war, basically just run their currencies to zero.
Something like that is only possible with fiat money.
Exactly.
So it's not possible. Well, let's assume, as we always do, Bitcoin is global money and sound hard money. No one is going to spend that hard money on something that's not profitable. So there won't be able to fund nonsense wars or excursions that are only funding a very small or profiting for a very few number of people.
I don't mean to. Go ahead.
No,
I was going to interrupt you.
Please.
War is very profitable for certain people, though. There is a great book called "War is a Racket" by I have it actually with me. I bought it. It's a quick read. If there's a good book to read, it's called "War is a Racket," and it's by Smedley Butler. And he talks about the companies and their profits they made during World War, the American companies that profited hugely. I found the government money part about the war, and a great example here, and I'll read the statistics. So depreciation of national, so this is a table, depreciation of national currency against the Swiss franc during World War One, and the nation. So USA had the least. The World War One currency depreciation was 3.44%. United Kingdom 6.63%. France 9.404%. Italy 22.3%. Germany 48.9%. Austria-Hungary 68.9%. And so the last three countries were part of the Central Powers. That sounds right. Yeah, Central Powers. And so they took more of a toll because they lost the war theoretically they lost the war. I mean, really World War One, there wasn't much, ground. It wasn't like World War Two where, America, Russia, and the, allied powers basically took over the land. World War One was very much of a stalemate for the most part, especially the Western Front. Not that there weren't areas where, ground was made and lost, but that war was notorious for the trench warfare. But when they talk about monetary nationalism, and World War One changed everything. And if you look at before World War One and how much the federal government had an effect on people's lives, especially in the U.S. or even other countries, it was very limited. World War One changed everyone's mindset, and the government just started to pervade into everything. And we saw it even more. And one of the biggest illegal acts in stealing from American people, whether you like to admit it or not, was by FDR, Franklin Delano Roosevelt, and his executive order. So executive orders issued by the president, 6102. And I don't think you guys can see it, but Crypto Humor can see it. And basically, it was the United States presidential executive order signed on April 5th, 1933, forbidding the hoarding of gold coin, gold bullions, and gold certificates within the continental U.S. So key word there at the end is within the continental U.S. So if you were a wealthy person, you could probably move your gold over Switzerland, other areas outside the U.S. But you got to think about the layman. The average person doesn't have that power to do that. And the order was made under, here again, when I talk about what happened with World War One was you had the Espionage Act and also Trading with the Enemy Act here. The order was made under the authority of the Trading with the Enemy Act as amended by the Emergency Banking Act. So here again, government we became a socialist country, whether people like to admit it or not. And I don't know if we still are theoretically with all the manipulation we have in our markets, but we are nowhere near a free market right now. Our markets are so manipulated, and you can see the distortion, a decade of manipulation that's about to unfold. And I think the greatest thing people say about this is the fallacy of the central bank. That they can control everything, and we're about to see it it's already unfolding in front of us, and that's what I say when I look at these charts, and I continue to see fucking Deutsche Bank set new lows. I see all these other, when you look at GE setting new lows, Ford stock is going back to its, lows of 2008, 2009. It's like watching a slow motion train wreck. And so getting back to the point this was the greatest theft of American people, and why? So what happened was the order was April 5th, 1933. Americans had to turn in their gold by May 1st, I believe. Yep, May 1st, 1933. All but small amounts, I think it was, So in exchange, and it was the price they were exchanging for was $20.67. So within the year, basically next year, they fixed the US dollar to gold at $35. So if you don't see the fuckery there, they made 75% profit on the dollar by fixing the rate to 35. And then eventually when Americans were able to buy gold back in the 70s, I think I found the statistic the other day, it was in the hundreds of dollars. So they profited immensely on the American people there. And whether you like it or not, they screwed over a lot of people from hard money and forced them to use the currency. Because that's what the dollar is. That's what the euro is. That's what the British pound is. It's currency. It's not money. It's currency. You have to remember that.
Yeah, and I want to touch on what is that Executive Order 6102?
Yep.
So it was much easier to confiscate gold because a lot of people didn't store it in their homes to begin with, right?
Yeah.
It's difficult to transport, so gold was centralized into banks or vaults or what have you. It is much more difficult to confiscate Bitcoin. If you can keep your private keys secure, no one is coming in to freeze your accounts. No one is coming in to drain your accounts. Your Bitcoin is your Bitcoin. And you're the only person that's managing those private keys. So it's a good point to mention how Bitcoin solves one of the underlying security flaws of gold, which is gold can be easily centralized and easily confiscatable. They will take your shit. It will be much more difficult and very expensive to go door to door, banging down doors saying, give me your private keys, turn it up. Bitcoin's banned. Everybody needs to get rid of it. That's going to be a very expensive thing for any government body to go and execute that.
Here's a picture of GoPro chart. I think Lyft is doing an IPO. Uber is going to try to. Why are they trying to do IPO? Because they realize they're private. Like Uber's valuation is now 120 billion. They realize their valuation as a private company is about to get fucked hard. So they are trying to exit. They are trying to exit so hard. Early investors, VCs, they are trying to exit.
Yeah,
GoPro, you
they're
look at GoPro.
certainly. Yeah.
GoPro hit $98 and now it's at 4. You know, it IPO'd here, hype, done. Snapchat's the perfect example. You look at Snapchat's chart. It's just been setting new lows.
The VCs are looking to dump their bags on retail. I mean, it's clear to me that's what I would assume is happening. So
Yeah.
I don't know. I would just be super careful with
Blue
any
Apron. Blue Apron opened up at $11 as high. It's now at $1.05. That's another. So all these is what these IPOs allowed people to do was, you know, early investors, VCs, dump their fucking bags immediately, and they dumped, and now look at where it's at. Retail got stuck holding the bag again.
And it's tough because a lot of the reason that they're dumping their bags is because I'm sure most of these are not yet profitable either. So they're literally only operational because of VC funding, because
exactly.
They are pumping cash into these businesses to keep them afloat. And believe me, once
free
once
money.
the curtains are drawn, and you kind of realize that, oh wow, all these businesses that we've been investing in that were supposed to be the future of whatever aren't profitable, and they never will be unless someone else is funding them or they're selling customer data to someone else. So as those business models start to unwind, it could get really messy.
Yeah, no, it's exactly, and that's where this whole thing where rising interest rates, they talk about zombie companies or zombie corporations. Like a huge chunk of the Russell 2000 index is zombie companies. And they talk about, like, you know, some of the guys joke about it in FinTwit, which is financial Twitter. You know, they're like, it's a good thing the Russell 2000 isn't considered a major index. You don't see it covered that much on CNBC. And here's a Spotify chart just to show you. Spotify opened up over here. It actually made a decent run up to here. But here again, Spotify's going to continue to set new lows because it's just uncharted territory. This is a new stock. I'll show you what I mean really quickly with the Russell 2000. It's down a lot more than all the. I think it might even be in bear market territory now. It's getting close. It's literally on the cusp. So for those that don't know, a correction's considered 10% from the highs. Bear market's 20%. And when you look at a lot of stocks right now, most of the FANG stocks are either in bear market or very close to it. Netflix is 100% in it. I think Google's the only one that's kind of holding its shit. Apple's, I think, bear market now. Apple fucking dumped hard so quickly. I had some putts on it too, and it was so nice. It was like, oh, thank you. But, you know, so here's the thing. Everything's turning over right now. No one in mainstream media is going to admit it, but it's happening quick, and I think this next week it's even going to get even worse. There's been a lot of hype around the Santa Claus rally. There's been zero Santa Claus rally. So just a food for thought if you're holding a lot of equity. Go ahead.
Proceed with caution.
Yeah, exactly. Very much proceed with caution. So I found in the War is a Racket by Brigadier General Smedley Butler, and it's the little title's like the Anti-War Classic by America's Most Decorated Soldiers. And here's the quote on the front. I spent 33 years in the Marines, most of my time being a high-class muscle man for big business, for Wall Street, and the bankers. In short, I racketeer for capitalism. And, you know, the sad thing about these wars is, you know, you get guys who are my age, even younger. I'm 23 now. You know, don't ever fighting. I mean, they're the ones who are the ones spilling the blood. It's no one. You know, it's not the politicians. It's not the politicians' kids. You know, it's not the executive sons that are going overseas and fighting these wars. And, you know, Vietnam War is a great example too. You know, if you read anything about the Vietnam War, you know, a lot of Marines say it was the toughest war for the Marines. I could go in depth about that, but I'm going to get back to who makes the profits. And he says the World War, rather our brief participation in it, has cost the United States some $52 billion. Figure it out. And think about $52 billion in 18 money. That's a lot of fucking money. He said, figure it out. That means $400 to every American man, woman, and child. And we haven't even paid the debt yet. We are paying it. Our children will pay it. And our children's children will be paying the cost of that war. And I think we recently just paid off World War One or something like that, or World War II. It was one of the two. And you could look that up if you want. I'm trying to read this right now. The normal profits of a business concern in the United States are 6, 8, and 10, and sometimes even 12%. But wartime profits, that is another matter. 20 60, 100, 300, and even 1800%. The sky's the limit. All the traffic will bear. Uncle Sam has the money. Let's get it. And if you've seen the movie War Dogs with Jonah Hill, and I can't think of the other actor's name, Jonah Hill, when him and his buddy meet up, he talks about, who's your client. He's like, I have the best client. I only have one client, the U.S. government. They fucking, because they can print money, you're making money. Those guys balled out. Why? Because the fucking government was giving them money for all these contract orders. They only needed one client. And so it goes to talk about, I'll read some of the profit differences here. So, here, International Nickel Company, and you can't have a war without nickel, showed an increase in profits from a mere average of $4 million a year to $73.5 million yearly. Not bad, increase of 1,700%. And then there's other ones here. Let's look at United States Steel. The normal earnings during the 5-year period prior to the war were $105 million a year. Not bad. Then along came the war, and up went the profits. The average yearly profit for the period of 1914 to 1918 was $240 million. Not bad. Another one, Anaconda, for instance, average yearly earnings during the pre-war years, 1910 to 1914, of $10 million. During the war years, 1914 to 1918, leaps $34 million per year. So that's an increase of 240%. That's 240, yeah. Utah Copper averaged $5 million per year during the 1910 to 1914 period, jumped to an average of $21 million yearly profits for the war period. So you can see that's a 400% gain. War is very profitable for business. There's no way around it. And this book's a great read. It's literally maybe 60 pages, 65, 70. You can read it. I read it in 2 hours. It's a phenomenal read. And I think it gives you a good perception about war and where government comes in, where the ability to print money at just basically inflate your currency allows people to continue to print. And so that was what I just wanted to show you guys there. It's some food for thought. And you could say, oh, you're not a patriot, but I'm more patriotic than most people. A lot of people don't even understand that the U.S. is not a democracy. It was founded as a republic, and we have steered so fucking far away from the Constitution. We've lost so much privacy and so much rights. It is sad. So that's why I'm bringing this up.
No, it's a tough topic, and it makes a lot of sense. And I think I didn't even think twice about our political institution and the way our country is run until I got into Bitcoin. And you start jumping down that rabbit hole, and then you start picking up books on Austrian economics, and you're just learning things that are so obvious, and you wonder how we jump down this Keynesian, just idiotic way to manipulate the money supply and all the devastation that it's caused. So I have never been more bullish on Bitcoin, because that's really what Bitcoin is for. It's a solution to a lot of these problems. You cannot politically solve any of them. You can't vote somebody in and solve this problem. You have to fix money first. So I'm hoping that Bitcoin can be that catalyst to global free markets, and everything should fall into place after that.
Yeah. Bitcoin is like one of those things. They talk about the red pill, blue pill. If you've seen The Matrix, the red pill means, you see the thing for where they are. Blue pill means you stay in the Matrix. Bitcoin is one of those red pills. There's a lot of other things that are red pilly, but Bitcoin's one of those things you're like, wow, the monetary system is fucked. And I think, as we've mentioned before, please do yourself a favor and get the Bitcoin standard, because as I said, the first half of the book just covers money. It really gives you a good perspective, and that's what a great thing. Can you say his name properly, because I never say it right?
Saifedean Ammous.
Saifedean Ammous. It's not about Bitcoin. It's about money. It's about understanding how money's been screwed with and throughout history. How money, what we went through. Fiat currencies have existed in the past, and here's a fun fact. They've all went to zero. Gold has been a standard of money for a better part of 5 millennium, so 5,000 years, and silver's been money, and they hold their value much better than do, fiat currencies. It's just known, because fiat currencies are easy to manipulate. You can just keep printing dollars, and we don't know it. And he doesn't cover Bitcoin, probably. He doesn't
Not
cover,
until the last chapter. He barely even touches it.
Bitcoin isn't touched,
Yeah, because you get through all of the monetary history and monetary economics, and
you're like,
all
wow,
the things that are yeah, all the Keynesian indoctrination that you've received through your public education, it starts to unravel as you're reading it, and the red pill starts going further and further down, and you start to get a little pissed, like, I can't believe this is what's been going on the whole time. And then you take a quick look at history that Safety beautifully lays out, and everything just starts to, light bulbs start going off as you turn each page, like, well, that makes sense. And it's fascinating.
It very much is. I think it's a great read. Definitely worth buying. I think it's, here again, investment in knowledge is the best thing you can do. And I think the more people that are aware of how bad our monetary systems become, the better we are off, the better we can lead to, personal freedoms, rights, and just having a better world. I don't know how long it'll take. We live in a time of what they call crony capitalism. It's example was people were really pissed off about the Amazon. Amazon gets like a bunch of tax-free incentives, for opening their new headquarters, and it's like, well, what about small business that's just getting fucked? Why is small business not getting tax-free incentives? It's just some food for thought. I have some oil charts open. Oil looks brutal, like absolutely brutal. Like oil, most likely, if we don't hold this level, likely we'll see like $25 oil. We test. I mean, that'd be, hey, I don't mind. I mean, I have, my car takes premium, so the cheaper the gas, the better, because I get like screwed. When gas prices rise, I'm just like so pissed when I'm paying like $4 a gallon for premium or $3.90. I'm like,
yeah, it's definitely the worst. I don't know. I don't have a car anymore, so I'm on foot.
On foot, yeah. You hopping on those fucking birds on electric scooters. The value, they're valued at $15 billion.
It absolutely blows my mind that and it just goes to show you what fiat allows.
Yes,
it allows for total malinvestment, and it's just going to be so funny to see what kind of businesses. And also, I have a theory that certain business models will also go away in the future.
Yeah.
Because when money fundamentally changes, business models need to adapt. The most exciting one for me is I wonder if subscriptions will still be a thing in another decade or so, because you have to remember, Bitcoin is a push system. It's not a pull.
Yeah.
So if I'm subscribed to something monthly, I need to physically confirm that transaction on my hardware wallet or whatever to go through to pay for something on a monthly basis. And I don't see. Well, it could happen. Maybe on Lightning Network or something else where a pull type system can be built. But as of right now, it's a push based system. So subscription services might look vastly different in the next decade.
Yeah, no, that's a good point. And on that point, I have here again, I just want to mention price action on charts. Here's a monthly bar, higher time frame, engulfing bar, oil fucking dumps. 2 pin bar, or indecision bar, pin bar, bullish pin bar, back. Here again, a very, very fine doji here in the monthly bar. Oil goes back up, but that's why I like price action. And so what scares me right now with oil, there's a huge fucking engulfing bar here. So fake breakout above, trapped a bunch of buyers, and we have dumped. And I don't think we'll hold here. I think this is most likely where we'll end, but that means cheap gas. But back on what you said, like Netflix, I think Netflix, I don't watch Netflix that often, very rarely. I only did when I broke my arm because I had nothing to do, and I only did it because they had a great documentary if you want to watch, and it's 11 hours, is the Vietnam War by Ken Burns. It really gives you a good perspective on that war and the whole history behind it, not just a 10-year period or really 8-year period where America was in war, but it starts in the colonial era of 1870s, 50s, and goes up and through, and just explains how it happened, because really we were allies with the Vietnamese people, and the early OSS officers, which was basically OSS is what the CIA became. I can't even think of the OSS stands for. Office of something. Office of Strategic Services. That's what it was. Yeah, so it opened in 1942, ceased in 1945, but that's what became the CIA, but they dropped a bunch of U.S. Basically special forces at the time, whatever you want to consider them, commandos into Vietnam to work with the Vietnamese people on defeating the Japanese at the end of the war, and all the guys, lieutenants over there, they got along with the Vietnamese people. We met with Ho Chi Minh then, so just another example of where the U.S. was working with the Vietnamese people, and then we ended up at war against them, because we wanted to support our form of democracy or whatever. And that war was a complete waste, and you can see it. It was the U.S. Army's morale had never been worse by the end of the war. I mean, it was so bad. You had troops that would refuse to go on patrols. You had fragging incidents, and fragging in Vietnam is where lower ranked guys, generally grunts, would turn against their higher NCOs, but generally lieutenants, whenever, because they would lieutenants would force them to go on missions. And they'd be like, fuck no. So what they do is they'd either fake it, and what they do is they throw a tear gas grenade or smoke grenade in their bunkers, which means like, hey, we're on to you, don't fuck with us. Or they'd actually use a frag grenade, because it's hard to tell who did the frag grenade versus a gun. But yeah, I mean, I know that's a little off topic, but this explains you how bad the Vietnam War got to a point. And here again, the reason we had to get off the gold standard was because of the Vietnam War and LBJ's, Great Society programs, where we started with Medicare, Medicaid, and Social Security. Wasn't Social Security introduced then, or was it before?
I have no clue.
I think I gotta look this up. I think Social Security, here's a fun fact, was introduced. So Social Security to get 65 was introduced when okay, that's what I thought. It was 1935 with Roosevelt, but it was introduced when the average male lived to 61, and you didn't get to your 65. So it made sense then, but people live into their 70s now. Like, I think the average male in the U.S. lives to 77, 78. So that's the big issue with these all the social programs we have are going to fucking nothing. Medicare and Medicaid's done in 2026. Social Security is done in 2034. I'm not seeing it. Crypto's not seeing it. Nobody in the millennial generation is seeing it. So that's just a fun food for fact. So start investing in yourself. Make some income streams, because guess what? They're not going to exist. And all those fucking socialists can suck my dick, because I can't wait to see these programs collapse on them. Sorry, I had to say it.
All right, we can decide whether or not we want to edit that out later. One last topic that I wanted to finish on, and only because we mentioned red pills, and that is the beef portion of the Beef and Bitcoin podcast. Yeah. And the reason we kind of chose that name, Beef and Bitcoin, is because one red pill just undoubtedly leads to another and leads to another. And I didn't get into this whole carnivore diet thing until I was into Bitcoin. And when you take that Bitcoin red pill, you start to, in order for everything to make sense, you need to reject other things, right? You can't have a good understanding about free markets and monetary economics without rejecting Keynesianism, because it doesn't make sense. And then eating meat and only meat is just a complete rejection of everything that you've been told prior, of some sort of ridiculous low-fat, high-carb diet that will consequently actually give you diabetes, and eating meat and all that stuff will not cause heart disease and all this other nonsense. So it's really just one red pill after another when you get into Bitcoin. And I wanted to talk about the carnivore diet as being just another red pill. The fact that I've been doing it for a couple months now and I'm not dead and I feel fantastic just goes to show me that everything I've been told was
a lie.
They either got it. Yeah, right. It was either like a really big fucking mistake. The American Heart Association just really got it wrong by accident, or it wasn't true. So it can either be, it's only going to be one of those two things. And I have a feeling that the statistical evidence was skewed in such a way to make eating meat look much more bad for you than it actually is. So, don't be afraid to eat only meat for a week or two and see how you feel. You won't die, I promise.
Yeah, like I'm not as strict about the carnivore diet as you. I eat a lot more meat now, and I try to. I barely eat vegetables and fruit now. I mean, like last night, like my dad brought home some fucking he had some Chinese chicken, so I fucking hopped on that golden chicken and some shrimp fried rice, because I hadn't had that in years. And I was like, fuck yeah. But I eat meat for the most part now, and it shocks people. They're like, wait, he only eats meat? Like, people are like, what? How can how can you live? You need your whatever vitamins, And as you mentioned before, definitely make sure you're eating your salt. Salt's important, and you also got to be drinking a lot of water. That's pretty normal. A lot of people don't drink enough water, and that's a huge issue.
For sure. Yeah, it's not complicated. Drink water, use salt, eat meat, and buy Bitcoin. Those are that's it. Not complicated.
With the carnivore diet, like, I used to make a lot of protein shakes. I don't make any of those anymore. And the great thing of the carnivore diet, you can eat as much food as you want, and you literally won't overeat. You won't get fat. Like, you could try. You probably could if you're eating like 6 steaks a day, but it's hard to eat 6 steaks. I do like 2 steaks, for dinner, for lunch, and I'm pretty fucking full. I do like 3 or 4 hamburger patties, like half-pound patties. I do a boatload of chicken. I do hard-boiled eggs. I'm probably gonna cook a lot of bacon and eggs after this podcast. Haven't ate anything yet. I do intermittent fasting. I like that a lot. Rewards you more when you eat. Like, I usually only eat during an 8-hour window. But.
Yeah, that's all great stuff. That's the way to do it. My life got so much easier since I pretty much only eat meat, bacon, and eggs. It's just gotten it's like the ultimate life hack.
Yeah, seriously.
It's the ultimate life hack. That's it. My life got better significantly. I love it.
So, here we have a chart of another shitcoin, USDC. Again, stablecoins are fucking retarded. Stay away from them. We've seen it before. Tether. This is from Coinbase, and really Coinbase Pro, which is formerly known as GDAX, Global Digital Asset Exchange. I don't know why they fucking changed that name to Coinbase Pro. I guess it was because people didn't understand that GDAX was a part of Coinbase because people don't do their research. But here's Ethereum traded against in USDC, what USDC, US dollar fucking circle, right? Through Poloniex.
I think so.
I'm almost positive that's what it is. And because Poloniex is technically owned by Goldman Sachs, theoretically, because Circle is owned by Goldman Sachs. So, but as you can see here, the volume's absolute dog shit on this. And right here, this is on a 4-hour chart. It went, so since there was such a big issue with like volume, the price flash crashed down to like $12. So this is the issue with fucking these shit coins, these fucking stable coins, is they just do that. Down to like $12. And we've seen this before with other coins. Like, stay away from stable coins, whether it's USD Circle, Make or Die, Tether. They're basically, they're not stable coins because all they are is fiat backed stable coins, which makes 0 sense. So you're basing your stable coin, which is theoretically stable, on a floating rate currency, which is always changing price. And as I mentioned before, I'm just going to open a Forex chart just to really give you guys a good understanding of, like, here's a good example. USD JPY. This is a monthly bar chart. Do you see stability? Because I don't. Euro USD looks terrible. Here's another example. There is nothing stable about these, fiat currencies. But back to this stablecoin here, that's an issue. And earlier this week, stablecoin, basis stablecoin, and CH, and I saw this earlier, confirmed shutdown, blaming regulatory constraints. So basis as another, all these stablecoins, for whatever reasons, it's stable. 2018 has definitely been the year of the stablecoin. I think it's because, like, the same thing with the GUSD, which is the Gemini US dollar or whatever. All these people are like, oh, we can have our own printing press. Look what Tether's been doing with Bitfinex and Tether have been doing. And so I think they, the fucking Winklevoss brothers were like, oh, we can have, we can print our own, have our own printing press. And so basically they confirmed shutting down, returning all funds to investors. They basically decided that the landscape is the regulatory landscape was too unfavorable to launch the project. According to an interview today in Forbes, the startup moved to return investor funds reported by the block. Originally called Basecoin, Basis received $133 million in funding to build an algorithmic stablecoin. So, here again, stablecoins are shit. Stay away from them, avoid them. It's even worse than like a shit coin, to be honest, because they could literally collapse. Like, if people lose confidence in it, like we've seen with Tether. At least the shit coin kind of trades in a pattern, cycles. You don't have that with stablecoins.
Yeah, and they're highly centralized, so anybody can kind of step in and turn them off. That's what one of those regulatory constraints is that the SEC will come in and say you will no longer operate that stablecoin, and that's kind of it. And you need to hope that you get your fiat or Bitcoin back after that.
I remember at one point, like, I had some money in like Tether, and it was a good amount, and I was like, shit, I probably should move this out. And this is like before Tether had that incident where it went down to like 75 cents or something that one week, a couple months ago, whatever it was. It wasn't that long ago. And that was like one of the best trades of the century, was buying Tether at 75 cents when it went back up to $1. Easy trade. But here's a beautiful chart to look at. And on the topic of shitcoins and whatever. Here is the chart of Bitcoin Cash US dollar. As Peter LeBrant said the other day, I think you saw his tweet too, there should be an investigation into this scam, because all Bitcoin forks are scams, pretty much. And you can see another Bitcoin fork fucking released at $128, up to $4,000 when Coinbase listed it, and has went from $4,000 to $77. It's quite impressive, right? It's only down 98%.
I mean, that's just, it's the biggest, it might be the biggest shitcoin of them all.
Yeah.
But you know what? It's funny because these are the types of attacks you're going to see on Bitcoin. They're just social attacks. Mm-hmm. It's trying to persuade the masses that, oh no, don't look over there. This is the real Bitcoin over here. And they're a lot cheaper to execute than like a technical attack. So, I mean, you're just going to keep seeing these. Hopefully, the forks might be over, actually, now that I'm starting to think about it. I hope that Bitcoin Cash and Bitcoin SV just work their way towards zero, and people will think twice about forking Bitcoin.
Like, there were so many forks last year: Bitcoin Diamond, Bitcoin Private. The Bitcoin Private one was pretty funny, because it pumped the shit out of what was it? It was one of the Zcash coins. It was not Zcash. It was
I think it was a fork of
Zcash. It was
I think you might be right. It was a fork of a privacy coin that was based on Bitcoin, and I mean, I remember that being shilled really hard on crypto Twitter.
Yeah, I'm trying to find it now.
Yeah, I don't know. People fell for it. That's the problem. A lot of people fall for these scams, and it's
Classic, I think.
Yeah, what a joke. I mean, the whole thing is.
I think that was it. Yeah. Yes. Look at this chart.
Look at that,
dude. I remember that, and so that was why, like, when I had Sumo Coin, and it was one of those low circulating supply coins. This coin was like a few million circulating. I'm gonna see if I can find ZCL. Yeah, Z Classic, ZCL US dollar. Yes, there we go. It's hard to explain how much, but this is just a Bitcoin chart here. The thing went from and I'll pull up the USD chart. It's now at 91 cents. I had people email me about this. This guy was like from Sweden or Norway. He's like, I bought it at like $15 and it went to like 100 and something. Here's the USD chart. Like, literally, this is what worried me about when I was holding Sumo, was like that a low circulating supply coin would get pumped this hard. But this is all because the fork news came out. So you can imagine these guys were smart. The smart guys who were going to fork this coin, were going to fork Z Classic to Bitcoin Private. They were forking Bitcoin and forking Z Classic. Well, all you had to do is hold a few of these Z Classics, and you made a shit ton of money. I'm going to go to daily chart so I can see a little more of this. But you can see, dude, the thing went from $3 or $2 to 260 in the span of 2 weeks. Like, not even real. Like, that's astronomical. Look at that. And it held it was the biggest dump of all time, I remember. So that was the fork there. The fork was like right there in February, and then just dropped back down to nothing. It still did pretty well, on $2 to 30. It still went 2 to 38, dude. Like, that's what I try to tell people. Like, there was a lot of good alt plays in April, late March, early April, into May. Like, there was some good money to be made there. But I mean, look at that. That's ridiculous. It was trading at like $2, and it went to 260. And that was like two. I remember seeing that happen when it went to it went up a little bit like in early December, and I thought about buying it, and then it just went like that, and I was like, oh, I don't want to buy it at 133, and then it went to 260. You know, it was absolutely insane. Like, you could have been buying the dip on it at 50 and still made a 400% return on it, 500% return.
That's so wild. It makes me think of that Bogdanov video meme somebody doing like the subtitles, and it was like
Dude.
we pump the coin up, and then we dump it, and that's like exactly what we see here. I mean, just total manipulation.
Dude,
I mean,
look at this.
People got wrecked, absolutely wrecked. It blows my mind, and it's gonna keep happening too, which is the best part.
Yeah, dude. So theoretically, you could have made like 170 times your money in literally the span of, I think, 2 weeks. I think that's literally, it was like, yeah. So if you bought this in early December and sold like early January, you made over 100 times your money.
You want to jump into the CLOs?
Yeah, so CLO is a collateralized loan obligation. If you've seen The Big Short, CDO, collateralized debt obligation, there's still like, I did some notes the other day. I read a whole thing from Guggenheim on CLOs, and they try to explain how like they're different, and like there's this kind of preconceived notion. Actually, it was pretty surprising. Like none of the AAA and AA tranches of the CLOs during the 2008 financial crisis failed. They're defaulted. So it's kind of set up. So it's I'll just pull up a chart actually. Same thing with tranches. Same exact thing. Here's the picture. That's where I took notes from. But so yeah, senior secured notes, unsecured, subordinated debt, and then equity. So higher claim on cash flows, lower claim. Basically, when there's not enough cash, it flows. It's a waterfall. So first money gets paid to the AAA, AA, single A, triple B, and double B, and so that's debt, and that's the equity. Equity tranche gets what's left over, and they're actively managed. So basically, collateralized debt obligations just, you know, they're only allowed now to trade basically bank loans, but prior they were allowed to trade a lot more assets, but that didn't happen, you know, after the 2008 financial crisis, because it was all fucked up what happened. That's why like the stock charts don't look as bad in 2008 unless they went to zero, but basically the whole economy is on the verge of collapsing because nobody would lend money and bank to bank, and so that's why they injected the economy with money. But going to why the wheels are coming off the leveraged loans, so there's been one record of daily outflows in senior notes loan ETFs. Also, ETF S&P LSTA, which is a leveraged loan index. That's all you need to know. But there's a crazy stit. And then here's another thing: U.S. loan funds saw 2.5 billion, and you can see like right as the market started to tank this year, everyone's starting to pull money out. People are realizing this is the top. Smart money index, if I can find that somewhere. The smart money's at the lowest point ever in like its recorded history, or at least lower than 2000 low, and then the 2008 low when smart money was completely out, and retail money basically got screwed as per usual. That's how it works basically. What's going on with this is basically collateralized loan obligations are suffering from a rate rise forecast, and this is the spread between like basically CLOs are based on like the spread between the 3-month LIBOR, however you want to pronounce it, which is London Interbank offering rate. And so now it's had the biggest monthly increase since early 2016. And the big deal here, and this is we're at peak issuance actually for U.S. Collateralized loan obligations. So the big issue here is percentage of loans trading above par, and this is the absolute insane thing. It was about 70 to 80% here in about October, and it has went to basically zero. And what that means is basically interest. So the interest rates are going to be more on it, but the actual bonds themselves are tanking prices, which is ridiculous, which is crazy. I mean, that's literally a 2-month span, October to December, which is absolutely insane. And it's something to keep in mind because this, another credit crunch, credit crisis. There's a lot of things happening right now, and I know we're kind of looping back around to the macro, but here again, this is where Bitcoin comes in. This is what happens when you have decade manipulation. You have all these issues, and no one wants to admit it yet, but when loans, the leverage loans freezing up, outflows are going to keep increasing, and you're just going to see a whole bunch of issues start popping up, here until the end of the year. And in 2019, I think 2019 is going to be brutal. I don't think you can't ignore it when you look at the long-term charts, you just can't ignore that we are about to hit shit's about to hit the fan, and that's the way I look at it. And this is just another piece of the pie here. Here's a classic example of some chief executive point, Eagle Point credit. There doesn't seem to be a theme for sophisticated institutional investors being worried about near-term credit risk at this point, said Tom Majewski, whatever his name is. If anything, the cheaper prices have started to bring in more investors to the market, and these are the same things they say in 2008. You'll see a lot of people saying, "Oh, these are a great time to buy stocks because they've dipped." Well, things have changed. There's a lot of different things that have changed, whether you look at fundamentals or technicals, and just do your own research is what I try to tell people. And I think crypto, you can speak on that. Do your own research. Always do your own research.
For sure. I mean, before you, just talking about Bitcoin here, before you do anything, get yourself a copy of the Bitcoin Standard, read it, and then go read the Bitcoin white paper, and then go jump onto Mises.org and consume as much Austrian economics as you possibly can. And then things will start to make sense, and you can choose for yourself if you think Bitcoin's monetary policy is sound and does it have a shot at becoming global money. Period. That's it. But you have to go and figure that out for yourself, and nobody can learn it for you. And I think I found that to be the most frustrating thing, because you can think one thing about Bitcoin from day one, and then now for me, over a year later, I've learned so much, and how I think about Bitcoin is completely different than the day I first heard about it.
Yeah, I've changed so much from when I first got into crypto. It's so bad. I used to be amazed. Not that I still don't find shitcoins interesting, but I used to be a shitcoiner, and I didn't really understand. I was like, Bitcoin's so expensive. I was like, why would I want to buy that?
I don't know. It's my favorite thing that's ever happened to me, by far.
A lot of people go through that phase where they go from shitcoiner to kind of understanding Bitcoin, and then you finally come around to. Most people end up as Bitcoin maximalists, I think, eventually at some point.
It's a life cycle. For
yeah,
sure.
I definitely more towards Bitcoin maximalism. It doesn't mean I still don't look at shitcoins, because as you know, shitcoins can pump, and as we showed you earlier, you can make a lot of money on that. So I'm a speculator. Not sorry. Is there anything else we want to cover today, besides that the whole world's about to end?
No, I think that's it. This is gonna be the longest podcast we've had so far. If you're listening to this right now, you are a fucking champ. Shoot me a DM and let me know that you actually listened to the whole thing. Yes. Maybe we'll do like a fucking giveaway or something like that. But You guys deserve it for sticking with us with this one, because it was super long, but we wanted to go the distance. So with that being said, take a look at the show notes when this goes up on YouTube. We'll put all of our links and all of our information. You can follow. I just got the Beef and Bitcoin Instagram page up and running. Yeah. So go over there, follow that page, follow Crypto Humor, follow Crypto Coitus.
Yeah, I have Crypto Coitus or Brett Coitus on Twitter. I changed my Twitter handle, so it says Crypto Coitus is my name, but still at Brett Coitus. Other thing I wanted to just say, shout out to Nick Buckler for the new Beef and Bitcoin. You'll see it in the next episode, but it's a new artwork, and he works for YellowCard.io. They try to make buying crypto easier. So YellowCard.io.
Perfect. All right, and with that being said, eat meat and buy Bitcoin.
Yep, do your own research. Thank you.